Imagine walking into a bank to deposit your hard-earned money, confident that it is safe and growing. But here's the reality. Your money doesn't just sit there. The bank immediately puts those funds to work, funding loans, fueling investments, and generating profits you will never see. Meanwhile, your savings are eroded daily by inflation, bank fees, and interest rate policies designed to favor the institution, not you. The financial system is not structured to build your wealth. It is designed to keep you dependent. In this video, we reveal 14 financial secrets banks don't want you to know. From how they profit off your deposits to the tactics they use to lock you into debt, these insights will change the way you view your bank forever. Stick around for the 11th secret. It is truly shocking and will explain why bank staff are always so friendly to you. Let's start with secret number 1. Keeping your money in a traditional savings account effectively makes you poorer. Most people believe bank deposits are the safest way to grow wealth, hoping for interest earnings. However, the interest you receive is almost always eclipsed by what you lose. If you deposit $1,000 at a 0.5% interest rate, you earn $5 in a year.
Yet, with inflation hovering around 3%, the purchasing power of that $1,000 drops by $30. You gained $5 in interest, but lost $30 in value. You were effectively down $25. Over a decade, this gap widens significantly. Your money is actually safer under your mattress, where it won't be quietly consumed by the inflation hidden behind the guise of security. Banks want you to believe they are doing you a favor, but they simply take your deposits and lend them out at much higher rates, often 20% on credit cards, while paying you a fraction of a percent. Secret number 2. Banks create money out of thin air. Most people believe only the government or central bank can issue currency. In reality, every bank creates money daily. By law, a bank only needs to hold a small fraction of your deposit as a reserve. The rest they can lend out. If you deposit $1,000, they might keep $100 and lend out $900. Here is the trick. When you check your account, you still see $1,000, and the borrower sees $900 in theirs. Suddenly, $1,900 exists where there was once $1,000. Multiplied by millions of transactions, banks are manufacturing money that never existed before, and they charge interest on every bit of it. If the public truly understood this, the financial system might face a revolution by morning.
Secret number 3. Credit cards are the bank's secret weapon. They are marketed for convenience, but they are designed to trap you in debt. With average interest rates around 20%, if you owe $1,000 and cannot pay the balance, your debt grows rapidly. Over 70% of credit card holders cannot pay off their debt in full, which is exactly how banks maximize profit. If you only make minimum payments, a $500 purchase could end up costing you $1,000 or more. Credit cards are not free money. They are carefully crafted instruments of long-term dependency. Secret number 4. The richer you are, the less you pay. If you are struggling, banks charge high interest rates and fees. If you are wealthy, they offer the lowest rates possible, sometimes even lower than the rate of inflation. For example, when billionaires take out mortgages at 1%, they're effectively borrowing money for free. Meanwhile, the average worker pays 4% or more. Banks call this risk management, but the outcome is clear. The system punishes the poor with high costs while rewarding the wealthy with cheap capital. Secret number 5. Debt is a tool for the wealthy. While the average person fears debt, the rich use it to multiply their wealth. If you borrow $100,000 at 2% to buy an asset, and that asset's value rises by 20% due to inflation, you have profited significantly.
The wealthy borrow millions at low rates, let inflation increase their asset values, and build wealth without lifting a finger. Banks are more than happy to provide these loans to the wealthy, knowing they are safe bets. Secret number 6. Banks help the rich avoid taxes. Billionaires often avoid selling their shares to prevent massive capital gains taxes. Instead, they use their shares as collateral to take out low-interest bank loans. They receive $1 billion in cash to fund their lifestyle without ever triggering a taxable event. Banks facilitate this because they earn interest on the loan. It is a legal loophole that keeps the wealthy liquid and tax-free, while the average person must sell their assets and pay taxes immediately. Secret number 7. Offshore accounts hide trillions. Experts estimate that over $8 trillion, roughly 10% of global GDP, is stashed in tax havens. It is not just about criminals, it is a standard practice for massive corporations to shift profits to low-tax jurisdictions by licensing patents to shell companies. Banks and tax specialists help design these structures, allowing trillions to vanish from the tax base of the countries where the money is actually earned.
Secret number 8. Your mortgage makes the bank rich, not you. Many consider homeownership the path to freedom, but a 30-year mortgage often means paying back double the original loan amount due to interest. Throw in property taxes, insurance, and maintenance, and the investment often becomes a long-term drain. Banks demand their payments regardless of market crashes, ensuring they win while you carry all the risk. Secret number 9. Hidden fees are everywhere. From overdraft charges to inactivity fees, banks collect billions annually by nickel-and-diming customers. A $35 overdraft fee for a $10 shortfall is essentially a 350% interest rate on a tiny loan. These small charges are negligible to individuals, but represent rivers of profit when aggregated across millions of users. Secret number 10. The system is designed to keep you in debt. Savings interest rates are kept low to discourage holding cash, while loan and credit card rates are kept high to encourage borrowing. From student loans to car payments, debt is marketed as a product you must have. Once you are in the cycle, it is incredibly difficult to exit, which is exactly what banks want. Secret number 11. Banks gamble with your money. Deposits are not just sitting in a vault, they are invested in the market.
As seen during the 2008 financial crisis, banks often take extreme risks with customer funds. If they win, they keep the profits. If they lose, they often receive government bailouts while the public suffers the fallout. Secret number 12. The poor pay more for the same services. The less money you have, the more expensive it is to manage it. High check cashing fees, prepaid card fees, and predatory lending rates are targeted at those with few banking options. It is essentially a tax on poverty, facilitated by a banking system that charges the most vulnerable the highest prices. Secret number 13. Banks do not want you financially educated. Schools rarely teach personal finance because a confused customer is a profitable one. If you don't understand compound interest or investment strategies, you are more likely to stay in debt or leave your savings in a low-interest account. Keeping the public in the dark is a core part of the bank's business model. Secret number 14. Banks rely entirely on your trust. The system is built on the fragile belief that your money is always there. But if everyone tried to withdraw their money simultaneously, a bank run, the system would collapse because most of that money does not exist as cash.
That is why banks invest so heavily in expensive buildings and professional imagery. They need to project the sense of stability to keep the illusion alive. Knowledge is the first step toward financial freedom.
Now that you know the rules, you can stop playing the game on their terms.